This segment sponsored by Foster Financial. Welcome to Money Monday, where we talk about holistic finances and real-life things and how it could impact your investment portfolio. And joining me today is Caleb Doan, the Vice President of Foster Financial. Good morning.
Good morning.
How are you doing?
I'm doing well. How are you?
It's a little chilly outside.
Yeah, it's starting to get there. Yeah.
It dropped.
Yeah.
So dealing with our weather, but also dealing with worldly events.
Yeah.
So anything happened?
Yeah, a couple things. Yeah, things we've been, looking at for a couple years here. So.
Yes. Okay. So this election just happened. Donald Trump won. Mm-hmm. And so now we have to evaluate what is happening with his proposals and how it could possibly impact people's investments. Okay. So tariff
yeah.
is what we've heard over the campaign. And so let's just start off from the basics. What is a tariff?
Yeah, tariff, it's basically a tax on an imported good. And so, that typically raises the price of those goods coming into the country because that company that's selling it now has to pay for that tariff as well. So it's just going to be on countries outside of the United States importing goods to the United States. Mm-hmm. They have to pay that tariff to be able to sell here.
Okay.
And so,
And so is the tariff an individual tax on each item, or is it just a tariff on the country as a whole?
It kind of depends how it's set up. Like there can be tariffs that are to specific goods on a specific country. So there's different tariffs on like electric vehicles on China right now. There's some microchip tariffs on China right now. So it kind of just depends how it's set up. And that's one of the questions for the Trump administration is how specific, how targeted are they going to be with tariffs? Is it just going to be on China? Is it going to be on more countries outside of that? But I would say a lot of people assume that the tariffs are going to be pretty likely to happen.
Yeah.
Congress certainly has the ability to approve tariffs, but there is kind of a section in the law that allows the president to have some authority just doing that on his own without congressional approval. And so, the stock market is starting to certainly price in the fact that tariffs are very likely going to happen.
Yeah. And so when a tariff occurs, is the tariff taxed to the individual
the company that's importing,
would they be the merchant, I guess, the individual merchant, or is it taxed to that country's government?
Yeah, it's that business that's importing.
Okay.
Yeah, so it's certainly a lot of Chinese businesses are very worried about that. So that's one thing to kind of keep an eye out for. I'd say a lot of people are wondering at the end of the day, how is this actually going to impact, my stock? How is it going to impact my 401k? What I have invested.
And how will it?
Yeah, and it really depends on the companies that you're invested in, of course. So a lot of people assume, all right, Chinese companies are certainly going to be hurt by this if those tariffs are put on the Chinese companies. Domestic companies, it can kind of depend. If you're a company that creates raw materials, you create steel in the United States and you sell mostly to companies in the United States, it's probably going to help you because you no longer have to compete with a lot of the Chinese steel, for example. You get to maybe raise your prices a little bit. You don't have to compete with that cheaper steel coming into the United States. And so it can certainly help those companies. That's why we saw like Steel Dynamics. There's a lot of employees for Steel Dynamics around this area. Their stock jumped pretty significantly the day after the election because the assumption is they're going to be able to benefit from that.
Wow.
For other companies in the United States that maybe use some of those raw materials, maybe they're buying steel from China to make vehicles or whatever they're building. It's a little bit more of a gray area. Maybe there's companies in China that they no longer have to compete with, but also the price of their raw materials just went up too. So instead of buying that Chinese steel, they're buying from, Steel Dynamics maybe and paying a little bit more for that. So there's kind of confounding things. So it's like
if the business needs that product to still be an American business, but they need those supplies, they now have to pay a higher amount. And then also though, as a consumer, us being here, we may be impacted as well because if we get goods from overseas, from Amazon, for example, a lot of that stuff comes from overseas, China in particular. And now we're having to pay more for locally made items.
Right.
So that's interesting. So the fact of it being good for the stock market just depends.
Yeah, it really does depend. There are going to be winners and there's going to be
Yeah.
losers with this too. So we have to be kind of disciplined in how we change our investment selection based on these tariffs. I'd say it's like a very politically charged issue. So there's a lot of people maybe on the left that will say tariffs are the worst thing that have ever happened. There's a lot of people on the right say, oh, they're the best thing, in the world. It's important to remember, the true answer is probably somewhere in the middle of those two things.
Yeah.
Tariffs are already in place on China right now. So they were put in place under the Trump administration in 2016 and then left in place by Biden. And he's even raised some of those tariffs on China too, because it brings in a lot of money to the United States.
Right.
There's also kind of some security concerns too with importing too much stuff from China. So the answer is a lot of times somewhere in the middle there. You mentioned inflation a little bit too with raising prices on consumers. I would say the inflation caused by tariffs a lot of times ends up being a lot more targeted or a lot more specific than the inflation that we saw over the last few years.
Okay.
The inflation over the last few years was largely from government spending, the government printing a ton more money, a lot of the COVID stimulus that went out, raised prices all for every single good. If you go into the grocery store, bread was higher, eggs were higher.
And the supply chain issue and that cutoff of being able to get the goods.
Yeah, certainly. But it's like you saw the prices for everything go up. With this, if you're raising the price on Chinese steel, steel goes into a lot of things. So, of course, you're still going to see prices for a lot of things go up, but it's probably not going to affect eggs, for example.
Right.
So
Okay.
it's a little bit more targeted. I probably wouldn't expect inflation to jump back up or anything to what it was over the past few years. I think for the most part, that's behind us.
Yeah. All right. Well, we will see. And I know that you will keep us informed. So thank you, Caleb.
Yeah, thank you.
And if you would like more information about Foster Financial, we'll have their information listed below. Give them a call to get your complimentary consultation, and I'll see you after the break. This segment sponsored by Foster Financial.